Hello and welcome to Crypto Weeklies. Today in this video we discuss the price rally of Bitcoin to 69k. None of the content financial advice. The price of Bitcoin is slightly right now slightly above the 2021 high. It's holding that level for a while now after that rally, and from that base of the 200-week simple moving average closer to the 200-week simple moving average in early February 2026. It did got rejected when the price went to this white line over here, which was the 2024 March 2024 rally before that breakout in November time period. So that acted as a resistance one more time. This level for Bitcoin to watch is at around 73k. Price did come close to that level, but there wasn't a major weekly close above it since that last week of mid March. So that's where the price kind of at the weekly candle high went close to 76k, but the close of the week was closer to that 73k. So that's the next level to watch if the rally has some legs, more room to run, that is in the short term. This again comes off as no surprise now that the price is closer to $70,000 Bitcoin per my website. This is cryptoweeklies.com. This is the composite risk model that I have developed for the assets using several parameters such as regression based risk, time weighted average price based risk, simple moving average risk, drawdown from all time high, volatility, beta and Sharpe ratio. This composite indicator, now Bitcoin is now exiting the accumulation zone for the bear market as the price has risen from roughly speaking 60,000 to now almost 70,000. So with that comes somewhat of a risk. Again, this yellow line is right now where the 20-week simple moving average price is coming in closely at around 77k. So that's always a likely possibility that the price rallies to that 70k, from that 70k level to that 77k level. But you can see that this red line over here in the last bear market also acted as a significant level of resistance. That doesn't mean that the price stopped coming to that level again, like it did in March 2022. Again, tried one major attempt in June 2022 as well, and one time again in August 2022, and then again in November 2022. Every time the price tried to go to that level, it ultimately met with that resistance. Right now this level is coming close to that 77k level, currently at around $78,000 for Bitcoin. Coming back to the reasons why Bitcoin and most of the other cryptos again are very closely related to what Bitcoin is doing. The overall sentiment right now is more bearish than bullish. Nonetheless, there was a short-term rally in the market. The overall sentiment, as defined by the last 7 days worth of popular narratives, Bitcoin is still holding most of the attention in the asset class, with most of the narratives being around Bitcoin and Bitcoin mining. Coming back to why the reason for us to claim that right now, for the, again, not financial advice, why in this short term rally pump, why the price has exited the accumulation zone, starting with the regression based fair value estimation for Bitcoin. This mathematically derived fair value using a non-linear regression based approach. This white line over here says that Bitcoin's fair value is 78k, which again coincides with this 20-week simple moving average price based price action over here. But as you can see that typically, again, although one could say that whenever the price is lower than this white line, it's technically in an accumulation zone, which has some degree of truth to it. But the typical undervaluation zone starts with that diminished undervaluation zone. Diminished volatility based undervaluation zone is typically below the green line over here. So I will remove the fair value line, but and keep the one standard deviation residual line. And this green line over here typically connects all of those undervalued territories in the December 2018 bear market as well as 2022 bear market. At the end, again, fair value tries to come up with a better zone using regression and its own past market cycle based estimation of what the bear market bottoms could look like. That level for Bitcoin is slightly under 60k. So as price has rallied from that level of support like it did in early February, now this level to watch is below 59k, as price is still holding almost $10,000 air gap between the price and that regression based accumulation zones, start of that accumulation zone. That's why this one model saying the price is not in accumulation zone. Arguably, another more important model is the time weighted average price based model. This model, this white line over here, is the time weighted average price, which is since the last 12 years or so, since 2014, is tracking at a daily level what's where the price, that is the Bitcoin price, has spent its entire life. And based on the distance between the price and the time weighted average price, the risk levels are drawn, which are proportional and time adjusted. So at the bottom, typically whenever the price is trading in risk level 4 or below that, that's where arguably the price has come to somewhat of a consensus that price has cooled off enough. You can also add risk level 5 in the hopes of adding more time to accumulate BTC. Right now Bitcoin is at risk level 7, which is typically a zone of caution where price action tries to spend a lot of time in the bear market before the ultimate drop, like it did in 2022 over here, and now potentially longer time in 2026, as price spent a lot more time in from the 2022 bottom to the 2025 high going up. Like now it's only logical to assume that to come down from those highs it would take significant time. So risk level 7 is a level of caution. Risk level 5 or anything below that, typically that's where based on your own risk tolerance, again not financial advice, price usually bottoms, and at the last bear market the risk level at the bottom was risk level 3. So this time around, and again the one before that was risk level 2. So risk level 2 wasn't seen in 2022. Maybe this time around we don't get to see the risk level 3, but at least again, and by the same logic, risk level 1 was only seen in the 2014 to 2015 bear market. So each time Bitcoin improves one risk level at the bottom as the adoption gets more and more intense. Maybe this time around risk level 4 is where the bottom would be more in tune with the past bear markets and cycle to cycle growth on the time weighted average price. Right now the time weighted average price is coming in at around $28,000. The price doesn't go at the bottom and reach the time weighted average price. You can see at the 2022 bottom, the price at the floor was almost 25% higher than the time weighted average price. Prior to that it was 11% higher than the time weighted average price. If you and the cycle prior to that was lower than the time weighted average price. So if you go from cycle to cycle and assume that this delta between the price and the time weighted average price would ever increase, so this time around 30-35% difference between the eventual bottom at that eventual time weighted average price could be all at the bear market bottom. Let's say this time weighted average price grew from $24,000 to $27,000 in from that time period in 2025, late 2025 to now in early 2026. Let's say at the bottom this time weighted average price is close to $30,000, assuming a 33% air gap between the price and the time weighted average price at the bottom. 33% of 30,000 is 10,000, which is one third of 30,000. Then at the bottom price of Bitcoin could be closer to $40,000. And again, this is in line with I know right now the price is rallying, so it looks quite out of the place to claim that there is further downside. But at the bottom, at the eventual bottom, the 2 standard deviation floor on the regression based bottom, if you look at the dark green line over here, that's typically the 95 percentile bottom for Bitcoin. That level for Bitcoin is very close to that $44,000. Like for example, as mentioned previously, at using the time weighted average price model as a guideline, and also the regression model, which are two of the most important models per the composite risk scoring, and without any external bias. This is only mathematics and statistics to understand what the price could do at the bottom. So 45k level is estimated at at this point, what could be the entry point in that undervaluation, 2 standard deviation undervaluation zone? And you can see that in the last bear market, the 2 standard deviation undervaluation zone did provide some support before that eventual crash in November, December 2022. Even in 2020, this line came in handy to identify what was the undervaluation zone. This time around, again, right now it's at around 45k. Give it a few months or so, depending on the slope of the regression function, this level could be well close to $50,000, and a drop slightly below that, that could be the bear market bottom for Bitcoin if it comes to that. Nonetheless, accumulation without this, at least this light green line or 1 standard deviation residual line, without that being tested in the bear market, is very, very unlikely. Again, that doesn't mean it cannot happen, but there is no certainty in any of these predictions, because again, price action could do what it wants to do, but nonetheless the historical models provide that insight that at least in the bear market the price action has to spend some weeks, if not months, below this green line, which hasn't happened yet. So that's something that I'm personally looking forward to. In terms of where the price action could bottom, now that price action has corrected, this is the machine learning based forecast using time series forecasting techniques, using 12 years of weekly price action as a, and time series forecasting techniques such as seasonal ARIMA, LSTM, and standard deviation based confidence levels. So if there is a couple of weeks in, let's say, April 2026, we get couple of weeks more rally, the ceiling, that is the bullish ceiling for Bitcoin in those rallies, is close to $78,000 again, which is confluent with that rally to the 20-week simple moving average. On the other hand, if let's say from here, from mid-April to, let's say, 2 more months to mid-June, and till mid-June, let's say the price action does go down with time, the non-panic scenario for Bitcoin bottom is at around 58-59k. Again, coming to that undervaluation light green line in the regression based model also, this is confluent with that machine learning based price forecast as well. And if there is 1 month of panic in somewhere in this bear market, let's say from June to July, we get that 1 month of panic with a base price of the same base price of about 57-58k, let's say, from 1 month from that level. Again, the timelines might not exactly match. Let's say 1 month from 55k, assuming it starts in April, and then 1 month of bearishness takes the price action in a panic scenario close to 49k. 2 months of panic, price goes to 45k. 3 months of panic, close to 40k. So that all happens based on how many panicky months we get at the bear market, at the end of the bear market. Like the last time we got one in June, July drop, and then again one in November, December drop. So 2 arguably more bearish scenarios towards the end of the bear market of 2022. These kind of narratives also, one could say that the first panic drop occurred in January 2026, like it did from April 2022 to June 2022. Somewhere we are over here now. If 2 more panic months are there, let's say from this level, first panic zone gets to that 50k level, and then rally or counter trend rally from that point, or for a couple of months over here, like it did from July 2022 to almost November 2022, and then one slight drop into that $45,000 level for Bitcoin. That could be all for this bear market. So that's all I wanted to discuss today. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.